Less than 5 days now left before President Trump's deadline for Iran to open that Strait of Hormuz. And the markets in oil enduring wild moves. Let's bring in Gary Cohn, former Goldman Sachs president and chief operating officer and former National Economic Council director during the first Trump administration. You're the guy we want to talk to because you got your hand in both of these experiences. When you see that a single social media post, like the one that President Trump put out this morning, is able to violently move the markets, what does that tell you about the state of the markets right now?
Look, markets are on edge. We know that. We've known that for the last couple of weeks. Since we've been involved in this issue, this war, in the Middle East, markets have been hanging on every word, and we've had enormous volatility in the markets. You know, two Sunday nights ago, we watched oil move almost $30 in an evening. Those are unprecedented numbers, and as you said, movement in oil is trickling through, or it's not trickling, it's weighting down heavily on stock markets and other assets. Mm-hmm. So, you know, right now, the biggest determinant in where we go in our short-term economy and long-term economy is what goes on in the Middle East. It is the price of oil. Everything else economically is in pretty fair shape.
Okay, so oil is pretty fascinating. When you see that dive this morning, that was almost something that I don't think I've ever seen. To have it go from $99 to where it is now is pretty stunning. It's still up 30% since the start of the war. So I want your brain when it comes to what you used to do on the trading floors at Goldman Sachs. You know, how much do the algorithms play into this? Because the average investor or the retail investor was probably looking at this saying, wait, this is moving too fast for me. Yeah.
Well, look, we are in an environment where the machines or the algorithms have a dominant influence on what's going on. You know, individuals can't move nearly as fast as machines. You know, if you and I see something and we want to react to it on the screen, we go and react. And in this volatility, we may have missed our opportunity. Machines are programmed to work in milliseconds. Mm-hmm. So they don't have to go through the human thought process of saying, I need to react, I need to pick up a communication device, I need to communicate, I need to execute. They're literally executing real time. So a lot of the volume is machine driven.
But should we, as investors, react to earnings and data, or should we react to these violent moves?
Look, at the end of the day, I think volatility can be your friend and it can be your enemy. Because remember, fear and greed are what drive markets. Yeah. Volatility enhances fear and enhances greed. So on the fear side, if you've got a position that you're not happy with and the volatility is moving against you, you're becoming more and more fearful and you're tending to react haphazardly because you're not sure what to do because you've got that fear. On the greed side, we're seeing prices that no one would have thought we've seen. Exactly as you said. When I woke up this morning, oil was up. You know, you had an opportunity to sell oil close to $100 a barrel, and you could have bought it back substantially cheaper later.
But everybody thought that tonight would be the night that President Trump would start bombing once again because Iran had not moved on the Strait of Hormuz.
Liz, I understand what everyone was thinking, but remember, markets are very, very fickle. They will move on a hint of knowledge of what's going on. Markets interpret it very quickly, and you still had time to get in there and sell oil, get out of your long position, or short it at some point this morning and recover it for a fairly large or fairly dramatic move. So what the volatility means is you have to have a game plan. If you know where you want to buy and you know where you want to sell, you will get opportunities to get in and out of markets that you may not have think was possible.
So what is the biggest mistake that investors can make in a market like this?
Fear or greed. You know, if they have an idea, they want to buy something, and it gets that price, they're always fearful it's going to go lower. You know what? If you want to buy it at that price, buy it at that price. That's the right price. If you want to sell it at a price and it gets there, sell it. You know, you've got to have a game plan. You know, when you look at all the major trading desks around the world, you look at the hedge funds, you look at everyone, they walk in the morning saying, hey, this is our game plan today. Yes, it's subject to change. It's subject to change based on news, based on information, but still, when you think something's really cheap, you need to buy it. You can't wait for it to get cheaper, and I think traditional investors are always trying to buy the bottom and sell the top. As a professional investor, I've never once in my life bought the bottom or sold the top.
Nobody can, right? Who does? We'd love to meet
Someone does every day, but it's probably luck as much as anything.
Exactly. Gary, thank you for being here on any day, but on this particular day.
Well, thanks for having me. Congratulations on your new set. It's amazing.
Beautiful, yeah, the new set, the new graphics, all of that. Yeah. Fancy pants. Thank you.
Yeah, exactly.
Good to see you.